What's up guys, Steven Dux here. Welcome to the new week of video lessons, and today I'm going to talk about MBOT. This is a live account and I have made over $136,000.
Here comes the money.
So I'm going to explain my thought process and exactly where I entered, where I exited. MBOT, yesterday was uptrending all day, and there's no actually support. It was just uptrending, there's no even pullback. So I attempted to short into the 4.2-ish, covered 4.4 when this one breaks, and shorted one again. I think it's right here, 520, covered 550. And then I stopped trading after that because the stock is getting crowded. You know, when stock is crowded and the stock will likely to go much higher, especially on microflow. For example, you can go look at STAF, very similar pattern as this. And today, you just ran straight up to 19. So I want the stock to consolidate. I want to at least trap some back orders, because if it's uptrending, people are just going to keep chasing. Now you have to wait and eventually until the stock to consolidate, because yesterday it really didn't have any support. So today it just straight spiked to almost 20. And if the stock doesn't have any support, it will go down like how it spiked. That's why when I short into the 17s, I'm not afraid of to cover into support, because there's no support in consolidations. So when you're looking at a multi-day runners or anything that is super extended on microflow, you want to look at, number one, how much volume has been trading. Number two, is there consolidation or not? Because first, consolidation traps back orders. Second, volume can actually give you an idea how much back orders are in a specific area. So yesterday, it has volume, has no consolidation. We skip that. Second day, now the more day it goes forward, let's say second green day, third green day, fourth green day, the more overextended it is. So in the second green day, I consider it to be more overextended, and I'm looking for volume, I'm looking for consolidations. So today has volume, has consolidation, and after, because it did an offering in the pre-market. Now, once they did an offering, typically on low floats, if they do an offering in pre-market, it's typically dead. Before even market opens, it just drops straight to where they become. But they bounced off that mass panic. So when you're trading in the market open, you want to be aware of that, because a super bearish factor, and it's even bouncing. So that super bearish can be super bullish, if you know what I'm saying. Because when people think, okay, this factor is super bearish, I'm going to short it even harder, now it turns to be a bullish pattern, and the stock will likely to reverse harder than they used to. So the stock reversed on the 10s, goes to 20. And when they start to consolidate, now the first thing is you try to break out here. You didn't really break out, you faked out. So a lot of people got trapped in this breakout because they think, okay, so I'm gonna go to 100 or go to 50. Now they're trapped in 18, and then consolidates again. You try to push again. People think, okay, well, the stock gonna come back, but it turns out you went all the way back. Once this momentum cracked, this is where you should size in, because now all this, people are trading back and forth. All their averages are around 17, let's say. And when it cracks under 17, people are all nervous. People are trying to sell and will cause a huge chain reactions. So when this mass consolidation is over a couple hours, you will actually trap loads of back orders, because it's a microflow. And when the microflow trading that much volume, shares are going to exchange each other. When they exchange each other, all the buyers are typically around this specific levels. So keep that in mind. Consolidations are very, very important for low flow runners, especially on multi-days. You're looking for consolidations, and you're looking for consolidation breakdown in the afternoon. Now, I shorted in the 17 because right around here, it failed it failed of this 18. So it perked, it failed, and I consider it to be really bearish. And now short at 17, I want to risk 18 because that is my risk reward is, but I can actually risk 18.41. So I'm risking about $1.2 of total $17. That considered to be not even 10%. So you use 1.7, 1.4 divided by 17. People are thinking, oh, you're risking $1, but it's not that big a percentage considered to be where I'm shorting at. If you're shorting at, let's say, $1,000 and you're risking $1,005, that $5 is not even that big a percentage of $1,000 stocks. Then, once it broke down, here is where you should add, because to risk, then you draw your average down right about, I'll say, 15 to 16-ish. So you can risk this massive consolidation. Now, when I short it at 17, it draws your average down. Then you can actually move your average down because originally I'm risking 18. Now I added, I'm risking 17 because it actually broke down. So now, if I move my risk down, I can size it a little bit more. So when you got the confirmation, you size it a little bit more, and you take profits on the way down. And my last cover was 840, I think. It went to 822, and this will have continuations tomorrow. So I'm looking forward for the bounces. If it doesn't, there's KTOV, another potential play tomorrow. Traded 62 million shares today. For this, doesn't really have any resistance and support. You traded 60 million shares today, so tomorrow you will be, if it trades more volume than today, then you'll be stay away from it, because for any kind of ticker that trades over 30 million to 40 million shares, that considered to be crowded. So keep that in mind also. MBOT, don't worry about if you didn't get shares to short. Let me give you an example for YECOF. This is a really similar pattern of MBOT. Look at 1 year chart. You had bounces on 1, 2, and 3. You had 3 bounce shorts. At MBOT, this is just the beginning. If it give you 1 bounce short, 2nd bounce short, 3rd bounce short, it'll give you so many opportunities. You can still make a whole lot of money on those type of bounces. So don't get too frustrated. Opportunity always comes around. People needs to learn how to give out opportunities. Then when they starts to get super chill about the opportunities, they will actually be more rational than more emotional, because when they missed it, they think, oh, stock owns them money, and they're going to sizing harder on the next not very ideal play. And I hope this analysis is helpful. And one last thing. Typically, when microflow, when they typically drop about 70%. So tomorrow, if it bounces, it will probably drop a little bit more. All right, guys, that will be all. If you have any questions, leave a comment below, and you can ask me in the chat as well. That'll be it. Thank you very much, and you guys have a great day.